This is the briefing for Friday, April 22nd. I want to start out with a premise that I think I've talked about many times in the briefings, and that's that the markets spend most of their time in rotation. And if you look at the markets in terms of time frames, you can see that in most time frames that the market will be in a rotational pattern. So this is the spiders on a daily chart, and you can see the rotational pattern going all the way back to September of last year that the spiders have had with just an up and down movement, an area of rotation, really not having gone anywhere in that period of time. Now, it also is in a rotational pattern in terms of shorter time frames. So you can see this is a shorter degree of rotation. This is a shorter degree of rotation. This is a shorter degree of rotation. And then if you look here, this is a shorter degree of rotation as well. So breaking out of this degree of time frame rotation is vertical development to the downside. Breaking out of this area of rotation to the upside is vertical development to the upside. So while we may look at this as an uptrend, this is still an area of rotation in a much greater degree of time. The benefit that this gives us is that when we understand the development in multiple time frames, I should say the development of price in multiple time frames, then it gives us areas of really quality support and resistance. So we know that breaking out of this to the upside here was the potential for breaking out in vertical development higher. And in other words, another leg higher like this. But you can see that this even shorter area of rotation was unable to trade much above it, and therefore selling came in and we had this trade back through resistance, and then of course that brought on a much greater degree of time frame vertical development, completing a greater degree time frame countertrend rotation. I hope I'm making a little sense here. Now, it is also common for when support or resistance is reached for the market to pause, such as this right here, because most professional traders understand where important support and resistance levels are. So typically what they do is they will step back to see if there's enough internal strength in the market to drive it higher. If there's not, then buying subsides and then selling begins as traders realize there's not enough strength to drive it higher, and then you get this move back to the downside. So where we are and where I'm going with this is the fact that for the last several weeks or months, I have been bearish on this market, especially coming into this high. But what has kept me bearish is the fact that we have reached these resistance levels, and each time we reached the shorter term resistance levels, we have traded lower. Now, we also have this shorter term level that for the last probably 6 to 7 trading days that we were rotating around this 440 level, which was an important level also, because if we had traded down here and then bounced off of it, it would have suggested a 460 resistance level that would be tested. But instead, we broke through 440 and then broke through this level, which was the lower extreme of this area of rotation, thus opening up the greater degree probability for a test of the 415 level, which is these lows through here, and then potentially 410, which is the low from February, I think that's February 24th was that low, if I'm not mistaken. Yeah, February 24th. Breaking that then puts the market in a rotational pattern or a breakout in a greater degree time and price rotation that would then suggest looking at potentially a weekly chart to see where the next level of support would fall. Now, looking at price development and the internal strength, price development and price structure, you can see that volume has been falling off, and that typically we get volume spikes on the sell-offs, and you can see that right through there. But for the most part, through this area of rotation, volume has been declining. And that is potentially because of these rallies where buyers subside as the market tries to push higher. In today's trading, we have a volume spike or an increase in volume that is above trend, which is the first time in quite some time that I've seen that. So we have the support of volume, or it appears the support of volume, at least in today's trading, and market breadth got to an extreme low. So the internals, while we had basically just a waterfall move today in the indices, and you can see that right through here. I mean, this is just a slow waterfall, just absolutely just continued lower with each bar trading. So basically, this suggests now that we have a higher probability, and the reason that of lower prices and testing this 415 level. So the reason this is important, because when you break out of a shorter degree time frame rotation, whether it's to the upside or the downside, that gives you the higher probability of a greater degree time and price move. Those are where the better moves are made. So breaking through this low right here today, the low of this day, which was the 18th, which was Monday, breaking that low suggested a breakout in a greater degree time and price rotation, which was rotation from this level down to 415. Breaking out of this level is breaking out in this level also, which is a multiple time frame breakout, which would then suggest a much greater degree time and price move to the downside. And this is also true when you flip it around and you look at it from the upside, which could have been the same thing right through here. Breaking here would have been a breakout in this time frame, and would have suggested a much greater degree time and price move. What is important to watch here is whether the internals are confirming this, and volume has been extremely low. So it's going to be interesting to see if volume, especially in the coming days, will continue to increase as we see the market continue to move lower. Now, this opens up now the fact that resistance is going to come in right at this low, which comes in right around the 435 level, and then support is going to come in at 415. Keep in mind, 415 is extremely important. Now, we could come down and test it and then rotate all the way back up again. Whether that rotation is just back up to 440, back up to 460, or breaking out, going up to about the 480 level, we don't know that. But what we do know is if we do get a rotation or bounce off of 415, then that's going to suggest that we'll know where the resistance levels are to know whether we're transitioning from a shorter degree time frame into a greater degree time and price move. On the other hand, breaking 415, especially with the internals confirming it, is going to suggest a much greater move to the downside. Looking at the NASDAQ, you can see the same thing. 1 degree of rotation here, another degree of rotation here, the shorter term degree of rotation right through here, breaking through this low, which was the low of yesterday, pretty close to it. It was going to suggest that we're going to potentially trade down and test the 318 level. That's the low right through here. This is the February 24th low as well. Once again, volume falling off in the Qs. A little bit of a spike in volume in today's trading. This is net volume. Net volume is up volume minus down volume. That has been declining for quite some time, suggesting, in fact, that's why I really was not excited about this rally. It looked like great from price development, but if you looked at what was happening with net volume, it was really declining and on basically negative as it went into this high here. So upside resistance in the Qs is now at 335. Above that's going to be about 350, and then support comes in right around this this 318 level. That's going to be very important support in the Qs. In the Russell, basically the same thing. You can see the area of rotations that have occurred. Really, the Russell tried to break out. This was really something that I think I talked about this in the briefings, how the Russell really was attempting to move substantially higher, but the other indices were not following. And then, of course, we got this rotation back down, another area of rotation, and then this area of rotation which is much greater, and then a shorter term time frame. This comes in right around the 195. That's upside resistance in the IWM, and then support comes in at 190. Now, we also know that the transports had a pretty good sell-off in today's trading as well. And you can see that here, my chart has not updated. My transport chart is just a daily chart, and it has not updated yet. The Dow Industrials has updated, and it's coming in right around the 33.5 level, or I guess that's 33.5. Yeah, 33,500 level, reaching support. Breaking that, then you can see this area of rotation here would bring it down to about the 32,500 level. This red line is approximately where the transports closed today. So the transports are selling off as well. So what I like to watch is what happens with the Russell along with the transports. And a lot of times they'll give me a pretty good signal as to whether we're going to see some type of rotation up or rotation back to the downside. Now, what's going to be important going forward in Monday, basically two things. We are extremely oversold in the NYSE and in the NASDAQ. You can see that right there. This is net volume. You can see how it has been declining for quite some time, suggesting that the rally was not sustainable. And that, of course, transpired into what we've seen in the move down in today's trading. So I have to expect the potential for some type of rotation or pause to work off the oversold condition that the indices are in. Now, with that in mind, I also understand that because of economic events and other news events that could hit this market, that we could see a real flushing of this market in Monday's trading. What's going to be important, if we get lower prices below today's low and breadth is stronger, that's going to suggest exhaustion on the part of traders, that strength is coming back in, and we'll see some type of rotation back to the upside. If that occurs, or if we see just a rotation up immediately from the open, if that occurs, how that rotation develops will be extremely important, because this could be won and overdone, and then we could be trading right back up again. Important to keep in mind resistance levels. Those should hold on any rotation up the first part of next week. On the other hand, if we get a flushing, then it's going to be important to see support hold. If it does not hold, then there could be a lot of fear coming into this market, and we could see a lot of dumping of shares before it finds another bottom. So based on that, market's oversold, extremely oversold. I have to anticipate a bounce, but closing at the low of the day suggests that the indices want to go lower on Monday. They would have continued lower unless the market had closed. So I have to anticipate that if we do get lower prices in Monday's trading, if breadth is stronger and net volume is beginning to increase, then that's going to give me a pretty good indication that we're going to see some type of pause or rotation back up. And once again, how that rotation develops will be extremely important. And now resistance levels, holding below resistance levels, will be important if this is transitioning into a greater degree time and price move to the downside. These lower support levels are extremely important. Watch them very, very carefully. Have a great weekend. Should be a very, very interesting week next week.